Hello and thanks for joining me, Bryn Lucas. Today we're looking at the tricky area of how to get approved for a mortgage if you're self-employed. I've got a few of Phil Spencer's inside tips for this, but given that this can be complicated, make sure that you get professional advice from a mortgage advisor who will help you get the best mortgage for your particular situation. We popped a link below to connect you with our recommended expert advisors. There's actually no such thing as a self-employed mortgage. Anyone who is a freelancer, sole trader, contractor, director of a limited company or of a partnership can apply for the same mortgage products as anyone else. But self-employed people have to jump through a few more hoops. If you're employed, all you usually need to do is produce 3 to 6 months pay slips to prove your income. But if you're self-employed, you'll need to prove your income another way. For instance, in some cases, lenders will want to see your accounts for the past 2 or 3 years. Other lenders might accept evidence of your income from HMRC, either your tax statement or SA 302 form. To work out your average annual income, lenders usually take your earnings from the past 2 or 3 years using the net profit figure to decide whether to lend to you and how much. You might also be asked to evidence that your business will continue to make money going forward. For example, contractors might need to show proof of upcoming contracts, while company directors might be asked for proof of dividend payments or retained profits. Anyone applying for a mortgage, whether you're employed or self-employed, needs to pass a mortgage lender's affordability assessment. This is when the lender looks at your income and outgoings to work out if you can afford the mortgage. It will do this by looking at your bank statements, financial commitments, debts, childcare, household bills, and so on. So it makes sense to avoid any kind of red flags in the 6 months or so before applying. Things like payday loans or online gambling. And as with all mortgage applications, the bigger the deposit, the better. Self-employed mortgage applications will also need to show identity documents, proof of your current address, evidence of your right to live in the UK, and proof of where your deposit funds have come from. For instance, savings or a gift. As I said earlier, it's a good idea for self-employed applicants to use a mortgage broker. A good broker will be up to date with what lenders are currently looking for, as well as have good access to lenders who might specialise in self-employed borrowers. Mortgages for the self-employed have been a controversial issue since 2020, as many freelancers and small businesses saw their income fall dramatically during the pandemic and successive lockdowns. Our experienced mortgage brokers will know how different lenders are looking at self-employed earnings during that period. So do click the link to get the advice you need, and don't forget to subscribe to this channel and hit the alert button while you're there. I'll see you next time.